The FTSE 100, also known as the Financial Times Stock Exchange 100 Index, is a collaboration of the 100 largest publicly traded companies which are floated on the London Stock Exchange. It's widely considered to be a benchmark of the entire UK economy, and is often used to measure the overall health of the British stock market. The FTSE 100 is comprised of a diverse range of different sectors, including financial services, mining, and energy. The index is calculated using a market capitalisation method, which means that the largest companies make up the largest proportion of the overall index, and the smallest companies make up the smaller portion of the index. This means that the larger companies will obviously have a larger impact on the overall value of the FTSE 100. There's often a lot of discussion about the S&P 500, and it is essentially the gold standard for investing. That said, throughout these crazy times, over the last year, the FTSE 100 has actually outperformed the S&P 500 substantially. Apart from the growth that we've clearly seen over the last year, the FTSE 100 is also an excellent dividend payer, and that is because much of the index is made up of well-substantiated companies. The FTSE 100 tracker that I hold is Vanguard's FTSE 100 ETF, and it has been absolutely fantastic for me. I've held a position within the FTSE 100 for probably about 3 years now, so I've been through a market pullback when COVID occurred, and now obviously seen the benefits of holding this product over the last year. Now, it's been a while since I've done a product review like this. I used to do them quite regularly, so if there's a product that you'd like me to review, an ETF on Vanguard you'd like me to look through, let me know in the comments down below. Oh, and don't forget to subscribe if you like content like this and you want to catch all of my future portfolio updates. Anyway, back into the Vanguard platform. So we've got this ribbon up here across the top, the What We Offer tab. If we click on the drop down there, we can then select the ETF, or exchange traded funds, and that will bring you through to a screen here where you can see all of the products and ETFs that are available on the UK Vanguard platform. The one we're looking for is of course this one here. So from this first screen here, you can see a really simplistic breakdown of the overall product. The FTSE 100 is of course based in the UK, that's fairly obvious, and as we'd expect, it is 100% allocated towards shares. There's no bonds included because this is of course an equities market. The risk level is currently 6 out of 7, and there are 108 holdings. There's slightly more holdings than perhaps the FTSE 100 would suggest, but that's just the way the product is made up. For a full breakdown of the ETF though, we click on this full fund details page, and that brings you through to the actual page itself specific to this ETF. From this page there are 5 different sub-pages. You've got the overview, information on the price and performance, portfolio data which breaks down the companies that are held within this ETF, distribution, so a bit of information there about the dividend or the income that you can expect to make, and any costs and minimums. But we'll start off here with the overview page. Currently at time of filming, which is the Sunday the 8th of January, the market price of 1 unit of this ETF is £33.61. Now, one thing to bear in mind is that if you do invest in this product through the Vanguard platform, you're not actually eligible for fractional shares, which means that you have to invest a minimum of 1 unit of the fund. So you have to put in at least £33.61 to be able to buy this. If you are investing on Trading 212 or free trade, you can actually buy fractional units of this fund, which means you can invest whatever you want from £1 up. So you could buy £10 worth of this ETF rather than having to buy a full unit of the fund. So it is just worth bearing in mind if that's something that you want to be doing. Vanguard, the platform itself, is probably not the right place for you, and you should instead be buying this ETF through Trading 212 or free trade, of course. If you are looking at using Trading 212, please feel free to use my link down in the description below. We'll give you a free share when you sign up and invest just £1, which hopefully will get your investing journey off to a really strong start in 2023. So a bit of discrepancy here. Obviously the first page we looked at said it has 108 stocks. This one says 102 stocks. That was correct as of the 31st of December. So maybe it's changed around slightly as they're reallocating the funds. And it's got a very competitive ongoing charge fee of 0.09%. Now, to the best of my knowledge, that is the second lowest ongoing charge fee that you will find on Vanguard's UK platform. This is second only to the S&P 500 ETF, which charges an ongoing fee of 0.07%. So these are incredibly low charges, and that's one of the benefits of investing through Vanguard. You get to keep more of your cash for yourself to compound and hopefully make you financially free in the future. As we already said, the risk rating is 6 out of 7, and that is because it is into 100% equities. So if you scroll down and look a bit, you'll see that this fund is already ISA ready, which means that you can hold it either in a general invest account or into an ISA. Of course, ISAs have become particularly important, especially from the new tax year in 2023. Check out this video, I'll link it up above somewhere, which will show you exactly why ISAs are going to become more important. So the fact that this is ISA ready is vital. This fund currently has 3.8 billion in assets under management, which shows that it's been invested into by a lot of people. And we can see over here a past performance over the last 5 years. So the first thing you'll notice is that we've got two different bars on this chart, a red one and a blue one. The red one shows the net asset value, and that is the performance of this ETF itself, so the FTSE 100 ETF. The blue bar shows the benchmark, which as you can see is the FTSE 100. So that's the actual performance of the index itself. So what we'd expect to see here from an ETF that tracked very closely to the FTSE 100 is we'd expect to see very, very small variance in the returns of both of these two elements. And that is what we can see here. So you can see there's a very small difference here. Again, a very small difference up the top, very slight difference down here, very slight difference down there. So we're not really seeing any variance larger than 0.1%, which shows that this product tracks the FTSE 100 very closely. Something you'll also notice, as I've already mentioned, is that last year, which we all know was a very, very poor year for the stock market as a whole, the FTSE 100 returned 4.67% and the ETF returned 4.62%. So if we invested just into this fund itself, we'd have outperformed the S&P 500 and most other global indexes out there. And this all for an index that does get a bit of a bad rep as being a little archaic. So this is again is another reason why you should really properly diversify. We can scroll down even further down to the bottom here, and this shows the performance based on a lump sum investment at the time of conception. So the first time you could buy the FTSE 100 was back in May, I believe it's the 22nd of May 2012. So if you'd invested £10,000 there, you can see that would now be valued at £20,649. So over 100% in growth in just over 10 years. The price and performance tab shows you stuff fairly similar to those last two graphs that we looked at. Over here you can see the actual price of one unit of the fund, and it shows you the 1 day change as well. So the last trading day, this fund was actually up 0.87% or 29 pence per unit. The 52-week high is £33.82, so only just higher than the price at the moment. So we're getting up again close to 52-week highs, which is really, really impressive. And the 52-week low is just under £30, at £29.80. And that likely occurred when our famous Liz Truss was in charge. If you want more information on all of the historical data, you can have a look down here at all the historical prices at closing, but we're not going to look through all of them now. And that goes all the way back to the inception of this product, but we're not going to spend time doing that now. If we click into the portfolio data, this is where it gets a little more interesting. We can really break down exactly what we're going to be investing in by investing through this product. So to start off with, it shows you a few characteristics of the ETF itself. It shows you the price to earning ratio of the FTSE 100, and it shows you that the VUKE, so the ETF, actually matches exactly the benchmark. The price to book ratio again matches the benchmark perfectly, and the return on equity matches it perfectly as well. It also shows the earnings growth rate of all of the companies within this ETF to come up with an overall earnings growth rate, which is at 4.1%. We get the region exposure, which is obviously 100% to Europe, but because it's only going to be investing in UK-based companies. And again, you can see that here, UK-based companies, maybe a little bit of Ireland. We then get a weighted exposure, which shows that consumer staples is the largest part of this ETF, followed very closely by financials at 17.4% in weighting. We've then got energy, healthcare, and basic materials, with technology sat right at the very bottom. Now, as we know, the UK, the FTSE 100, doesn't really have much in terms of technology. A lot of technology companies are based either in America or in China, and we really don't have that much here, which is why it is important to not just hold the FTSE 100 itself. As we know, technology is a massive growth area for the next 10-15 years. Technology is always going to be a growth area. New technology is always going to innovate and push us forward. So it's important that you hold a certain amount of technological companies in your portfolio so that you don't get left behind. And then if we come right down to the bottom, we can see the holding details, which shows exactly what you'll be holding by investing in this product. And this is correct as of the 30th of November, so a little over a month ago now. And here are the top 10 holdings in the FTSE 100. We've got Shell at 9%, AstraZeneca at 8.32%, Unilever, HSBC, Rio Tinto, GSK. So lots of household names really, lots of companies that you would expect to be very, very prominent within the United Kingdom. Of course, lots of these companies are internationally recognised, so you're not just investing in the UK, you are also getting earnings potential from further afield as well. If we move through to distributions next, you can see that you'll get a quarterly dividend, which at the moment is yielding 3.84%. which is fairly nice. And that really is the FTSE 100. As I said, this is my favourite version of the FTSE 100 because of the incredibly low fee, the fact that it is ISA ready, and the fact that I can hold it with all of the rest of my Vanguard investments. If we come across to just ETF, you will notice over here, this shows obviously all of the different FTSE 100 ETFs, and this shows the ongoing charge fee. The one that I've been discussing today is the Vanguard distributing, so the FTSE 100 here distributing, which as I said has got an ongoing charge of 0.9%. Now what you will notice is that it isn't the smallest ongoing charge fee. The iShares and the HSBC FTSE 100 ETF are actually slightly smaller, but the fact that I can hold this in my ISA with all of the rest of my Vanguard products just makes it that little bit more convenient to me, and means that personally I utilise this product and I've never had any issue with it at all. If you're a Vanguard investor or you're on trading 2-on-2, this should be one that you're definitely considering as holding as your FTSE 100 exposure. Funnily enough, if we reorganise this chart, you can see that Vanguard are now the top two when we organise it by 1 year return. You can see that the Vanguard FTSE 100 actually returned more than the iShares FTSE 100 and the HSBC FTSE 100. And that's just because the actual assets, so the net asset value, tracks the benchmark much more closely than some of these other ETFs, which again is another reason why I feel that the FTSE 100 ETF, as given by Vanguard, is the best one to invest in. And there we have it, a quick overview of my favourite FTSE 100 ETF, which in 2022 outperformed the S&P 500 substantially. If you do want to invest in this, you can either invest on the Vanguard platform, trading 2-on-2, or free trade, any with which take your fancy, but definitely invest through an ISA. And this video shows you why that is so important. And if you want to see my most recent update on my Vanguard portfolio, which was back in December 2022, you can check out this video here to see exactly what 2022 did to my portfolio. I'll see you in one of them.